Good morning, students. Welcome to this live virtual classes organized by Board of Studies Academics. Till now, we had in chapter number 9, that is your international trade. And in international trade also, we had covered up to second unit. Today, will be discussing about the third and the fourth part of that. And one minor clarification is there that we'll be completing this international trade in uh, last class probably on Saturday, and after that we'll be completing that national income accounting part in 2 classes, and finally in the end class we'll be completing the Indian economy. So minor uh, adjustment has been done so that equal impetus has been given to all the chapters that has been assigned to us, or that has been given to the students for their whole foundation syllabus. So because as per the exam is concerned, national income accounting and um, uh, this classical and Keynesian economics that constitute an important component. So we thought that we'll be discussing that also in detail. And after that, Indian economy generally is not very analytical in nature. So you need to remember the facts and figure and how the Indian economy has evolved over the period of time. So we will be discussing in the final class. After that, your mock test series will be starting, series 1 and series 2, because ultimately now almost a month or so is been left out for your examination. So we want to give you ample time for your preparation, your revision, and practice exercise also, because that is the whole purpose of completing the class. We had completed the whole class in quite detail, and till now we are hopeful that you won't be facing any problem, particularly attempting the questions that has been coming at the foundation level. So even at the end of each classes also, we are covering ample number of practice test questions also, because generally on similar patterns question is been asked in your examination also. So since it's a objective type paper, so reading your text book is also important. That is the BOS study material that has been provided to you, because from there only the whole questions that is been coming in the examination. So carefully read the whole content that has been provided by BOS Academic. Apart from this, the summary at the end of each chapters are very important, particularly at the final lag of your preparation, because many a times summary gives, because sometimes it happens that you don't have time to revise the whole chapter. So summary is one sort of a tool that where at least the people who have worked hard earlier, by seeing the summary, they can have the whole remembrance of all the content that has been given in the chapter. So not taking much time, so I'll request Ashish to carry it forward, and as per the plan that I had just told, and we already discussed with Ashish. So over to you, Ashish.
Okay, thank you, sir. Very good morning, students. I hope, students, you are able to see me and hear me. We are about to start a particularly new unit. We hereby start a new unit, students. That's trade negotiations. Is this topic easy, sir? I would rather say it's very easy. First of all, what is a negotiation? It is a discussion process through which each country is trying to make terms favorable for them. Of course, it means when I am negotiating with you, I am discussing with you in a manner that my rights, my interests are protected. That is a negotiation. Today, all of you know that we are living in a world which is in a sense open economy. Open economy means buying and selling of goods and services is going to take place between countries. Students, when buying and selling of goods and services is taking place between countries, naturally, it is very important for the countries to negotiate, to come to a favorable trade arrangement, right? That is trade negotiation. See, international trade today involves intense negotiations among countries, right? These negotiations are bilateral and multilateral. See, bilateral means when there are two countries involved. Bilateral means when there are two countries involved. Say the two countries are, let's say, India and US. So that's bilateral trade negotiations. Then what is multilateral trade negotiation? Students, multilateral trade negotiation is one country is not the only game. Multiple countries are involved. More than two countries are involved in discussing the trade routes, the trade related aspects they are discussing. Sir, understood, sir. So on one hand we have bilateral and on the other hand we have multilateral. Not only government but NGO, pressure groups, everyone are involved here. In this regard, students, there are many regional trade agreements. Trade agreements are done amongst countries to reduce trade barriers so that more exchange of goods and services, more imports and exports are permitted or can take place. So that more imports and exports are permitted or more exchange of goods and services can take place. Number one, regional trade agreement is unilateral agreement. RTA means regional trade agreements. Unilateral agreement. What is unilateral agreement, sir? Students, it's a concept where one country is going to benefit the other country without expecting anything in return. For example, if India has very good friendly relation with, let's say a country, Thailand. So if India has a very good trade relation with Thailand, India may do so that India may impose no taxes or India may enter into an agreement with Thailand where goods coming from Thailand are not subjected to any tax. Unilateral agreement or unilateral arrangement. Goods coming from Thailand are subjected to no tax. Example is the generalized system of preferences. Now, students, what is bilateral agreement? Bilateral agreement is agreement between two countries class. Two countries. So, for example, both India and Thailand bestow upon each other some favorable trade relations. That is bilateral arrangement or bilateral agreement. Unilateral is where only one person is the beneficiary, and bilateral is both are offering each other some kind of trade discount or tax discounts. For example, India says that okay, goods coming from Thailand are going to be taxed only at 3%. Thailand does the same in its country for Indian goods. Now that is what a bilateral agreement means. Both are bestowing upon each other some benefits. Okay. Then there are regional preferential agreements. There are regional preferential agreements. Regional preferential agreement means suppose SARC, South Asian Association for Regional Cooperation. South Asian Association for Regional Cooperation. So here majority South Asian countries have come together to give each other special trade advantages. To give each other special trade advantages. That is SARC, everyone. Regional preferential agreements. Now we come to some interesting areas. Now we come to some interesting areas. there is something called trading block. Trading block. What is trading block? So here, one of the examples could be, your European Union. What will happen is, in Europe, there are multiple countries, right? There are multiple countries, right? So when they trade among themselves, they will not impose any tax. So European countries buying and selling from each other, no tax. But suppose any of the country trades with outside Europe. India is not in Europe, of course. So India say, each country on the products coming from India are going to charge, let's say, 10% tax. So common external tariff, free trade among members. Among members, there is free trade, no tax imposition among the countries, but for external, a common tax. There are, in some cases, they are called trading block. In the other cases, class, they are also called custom union. Now, if they ask European Union falls under which category, because both happen to have the same, then since they have written union, you will write it under customs union. But that is exactly what trading block does. Okay, right. But yes, but yes, here it is interesting. Free trade area. Free trade area. NAFTA is an example. North American Free Trade Agreement. North American Free Trade Agreement. Free trade area. What is it exactly equal to, sir? What does it exactly imply? Sir, I will explain you all. So here, students, you have North American countries. What kind of countries? North American countries. Okay. North American countries like, just a minute, USA, Canada, Mexico. Okay. Now, the interesting thing is, when US, Canada, Mexico have trade among themselves, they are not going to impose any tax on each other. Okay. But when it comes to trade with India, means something outside NAFTA, let's say put India here. When it comes to an organization outside NAFTA, each of them are going to decide their own trade arrangement. So it may so happen that goods coming from India, USA taxes it at 50%, Mexico taxes it at 30%, Canada taxes it at 10%. It can so happen. It can so happen. That is what a custom union is, class. That is what a custom union is, sir. Understood, everybody? Right, sir? Understood. So, class, we have the trading block, we have the free trade area, and we have the custom union. In trading block, there is free trade among members plus a common external tariff. There is free trade among members plus a common external tariff. Right? In free trade area, there is no tariff among members, but each are going to determine their own tariff rates. So remember, what differentiates free trade area from custom union? What is common is internally they don't impose tax on each other. But outside, in case of free trade area, each country independently decides their own tax terms. But in customs union, each country is going to impose a common tax, common external tariff. Common external tariff. Got it, sir. We now understand this better. Next is class common market. Students, when we say common market, here the main objective is to provide a free movement of labor, capital, and goods. Here there is a focus on what? In common market, there is a focus on free movement of what? Look at the word. Factors of production, like machine, labor, all these are factors of production. The focus is on their free and easy movement from one country to other. Got it, sir. Then finally, we have the economic and monetary union. Economic and monetary union. Yes, sir. So what is the economic and monetary union exactly? Students, here there is a common market. Here there is a common market. Okay. So common market. Okay. There is a common market plus common market along with common currency. Like see, for the entire European countries, they have come out with a currency called euro. Eurozone is an example. So in economic and monetary union, things are becoming more serious. Here there is a common currency as in place as well. So students, whatever we have discussed so far, let me present it to you in another format. Let's read whatever we have discussed so far for the common understanding of all. Let's see. What did I teach? Number one, international trade negotiations, especially those aimed at formulation of rules, are complex interactive processes engaged in by countries having competing objectives. Each want their country to do the best. So the countries interact among themselves to protect their rights. Okay. This is international trade. Now, regional trade arrangements. As I had told, it is a grouping of countries where they negotiate to reduce the trade barriers among themselves. To reduce the trade barriers amongst themselves. Okay, let's go, sir. There are different levels at which they integrate. As we proceed, the kind of seriousness increases. In free trade area, you remember what happens? No tax amongst themselves, but a common external tax. In customs union, the agreement is even stronger. Though the deal is same, the agreement is stronger. In common market, there is not only movement of goods, but also remember in common market, there is a movement of factors of production. And finally, economic and monetary union. In economic monetary union, everything is there, plus a common currency. If you have paid attention to this, you have heard it correctly. Good. Now, students, I wanted to tell you something about GATT. I hope you all are interested in knowing about it. Students, GATT stands for General Agreement on Tariff and Trade. General Agreement on Tariff and Trade. When was it signed, sir? Students, it was signed in the 1947 year. Year 1947. GATT was signed in the year 1947. And when did GATT come into force? GATT came into force on 1948. Now pay attention. It it was there till 1994. So GATT had a life of around 47 years. Why was GATT formed? See, there could be dispute between countries. If there is a dispute in our own country, if there is a dispute in my own country, I can easily settle it. How can I settle my dispute within my own country? How? How can I do that? I can settle the dispute in my own country by, yes, going to the courts of my country, Supreme Court, High Court. But if 3 or 4 countries are having trouble, how will that trouble or dispute be resolved? So GATT was formed to do that. General Agreement on Tariff and Trade, to set rules and regulations for trade between countries. But GATT suffered major disadvantages. That's why it could not last long. Do you know why? Number one, during 1947, when it was formed, either the countries were still under some other country's rule, that is, they were still colonies, or they had just gained freedom, like your Africa, your India, your China, just gained freedom. So do you expect these countries to participate in trade related arrangements? No, these countries will be rather more focused since they have just become independent. These countries will be rather more focused on their core issues. on their core agendas. GATT, General Agreement on Tariff and Trade. Another problem, GATT only covered trade in goods. So if I'm buying goods from other country or selling goods to other countries, that is okay, that is acceptable. But what about services? GATT did not have any comment on that. What about intellectual property? If I bring a secret machine that is my secret, my country's secret, to your country, and your country is copying my secret, then why will I invest in your country? You are not offering me any protection of my technology. That's why GATT failed miserably. First, it had very low membership. Many countries were not the members of it. Second, it covered only trade in goods. It had weak settlement. Also, it was not mandatory for members to follow. It was an option that was given that you may or may not follow GATT rules. You may or may not follow GATT rules. Such was the situation. Imagine. Let's read them out. The achievements and the limitations. See, GATT had helped in reducing taxes amongst countries so that smooth trade can occur. That was there. It reduced non-tariff barriers. It expanded the world trade, but it was not successful because it was inadequate. It had weak settlement system. It was not a treaty. If the domestic rules permitted, only then country would follow it. Otherwise, following it was just an option. So then came the Uruguay round class. Here comes the hero of the picture, the Uruguay round. Uruguay round is a hero of the picture. So it was taking place in Uruguay, and there was continuous negotiation taking place because it was realized that GATT was not doing its job properly. But to substitute a body like GATT, that required every country to be happy, because when every country is happy, then they will become a member. So after negotiation, the agreement was signed on 15th April 1994 and took effect on 1st July 1995, and WTO was established. Today, WTO has around 164 members, 164 member countries. And do you know, 123 countries participated in this round. 123 countries participated in this round. So, under which round was WTO established? Uruguay round. Or Uruguay round led to the establishment of which organization? World Trade Organization. Let's know a little bit more about WTO, friends. Let's know a bit about WTO, friends. Why was WTO established, class? Why was WTO established, class? Students, it was established to ensure trade flows between countries. To ensure trade flows between countries, that is, goods and services flow smoothly, freely, fairly, and predictably. Predictably. It flowed smoothly, freely, fairly, and predictably. Got it, sir. And what were its functions? Students, what were its functions? The functions involved to establish trade rules, to provide a forum for negotiations, to resolve disputes, to ensure transparency, and to assist developing nations. WTO, World Trade Organization, established when? 1995. Is WTO still existing today? Yes, sir. Is WTO still existing today? Yes, sir. It does. But yes, if you ask me from the practical standpoint that is WTO of any use, my answer would change. It is useless body. WTO is a useless body. This is my practical viewpoint. I have my reasons to say this, but you need to know that no, it sets trade rules, it provides a forum for negotiations, resolves dispute, ensures transparency, and assists developing nations. In reality, you know what happens? Only the developed nations eat the cream, take the advantage of developing nations. In objective, they are saying, okay, we are set up to assist developing nations. They are not assisting any developing nation. They are assisting their rights only. That is WTO. Let me explain it. Let me explain it in a more suitable manner. See, it is the global international organization dealing with rules of trade between nations. Its principal objective is to facilitate international trade freely, fairly, and predictably. What are the objectives of GATT? One may ask, right? To resolve trade disputes, to make rules related to international trade. Just read them. To make rules related to international trade, to provide a forum for negotiating and monitoring trade liberalization, to increase the transparency of decision making processes, to increase the transparency of decision making processes, to cooperate with other major international economic institutions, to cooperate with other major international economic institutions, and finally, to help developing countries benefit fully from the global trading system. To help developing countries benefit fully from the global trading system. So, what are the points? Rules for international trade, forum for negotiating and monitoring trade liberalization, to resolve trade related issues class, to resolve trade related issues, to increase transparency of decision making, cooperate with other major international institutions, and to help developing countries benefit fully from the trading system, from the global trading system. So many good points. So many good points to help developing countries benefit fully from the global trading system. Fantastic. Fantastic. Structure of WTO. Class, if I talk to you about the structure of WTO, dear students, I would like to talk about its three tiers: top tier, middle tier, and lower tier. What is top tier? Top tier of WTO is ministerial conference. Middle tier is what? General Council. And what is the lower tier? Goods Council and Services Council. So how do they meet? Who makes what decisions? Class, in the top level is the ministerial conference. Their decision is full and final. They meet once every 2 years. Once every 2 years. General Council, they can ask you which body of WTO settles dispute. So it's not the ministerial conference. They meet once every 2 years. So will the dispute be settled once every 2 years? No. You need a body that meets consecutively in the years. Yes, you are right, class. It is the General Council. It is the General Council that meets several times a year. It also functions as trade policy review body and dispute settlement body. Trade policy review body and dispute settlement body. And finally, class, we have the Goods Council, Service Council, the TRIPS Council. They report to General Council, that is the upper tier, and oversee implementation of WTO agreements. They see whether the WTO arrangements have been implemented properly or not. They see whether the WTO has been implemented properly or not. agreements have been. So each one has a rule. Let's see. The lower council reports to the middle council, that is the middle tier, about how much implementation has taken place of rules set by WTO. They settle dispute, they see whether trade policies have been followed or not, and they report to the top tier, and they make the final decisions. Where is the secretariat? That is the head of WTO located in Geneva, Switzerland. How many WTO members as of now? 164. Okay, sir. Now, students, whenever you become a part of WTO, there are certain principles one needs to follow. There are certain principles that one needs to follow, which are called the guiding principles of WTO, which are called the, tell me, which are called the guiding principles of WTO. So friends, what are the guiding principles of WTO? Number one is MFN treatment. What is MFN treatment? These are the principles of WTO. All countries have to follow these principles. Number one is MFN treatment, means if any country is a WTO member, है ना? If you give some tax benefit to that country, suppose New Zealand is a WTO member. India eases trade with New Zealand. Suppose if India eases trade with New Zealand, suppose you have benefited one country, now you need to benefit others as well. It means the same tax rate India has to impose on other WTO members also. You give one benefit to one member, you have to give it to other members also. However, last class I taught you, you can bypass this rule. Do you remember how? By entering into a separate agreement with New Zealand, a bilateral trade agreement. And these rules are over. Now they don't apply. Just imagine. Just imagine how the rules have been twisted. Okay. So, MFN treatment. Number one is MFN treatment. Most favored nation treatment. Next is national treatment class. What is next one, sir? National treatment. What does national treatment say? What does national treatment say? Once the goods have entered your country, once the goods have entered your country, once they have entered your country, you should not treat them any different from your own country goods. So suppose the goods have been imported, okay? You have imposed 10% tax on them. 10% tax has been collected. Now the goods are in your country. Now there should be no distinction or separate treatment of those goods. They should be treated as if they are Indian goods only. Again, you cannot say that no, inside the country also for such goods, these rules are there. That is wrong. Imported and locally produced goods, services, and IPRs should be treated equally after entry. Before entry, you impose tax. Once they have entered, now no discrimination. Third one is an interesting principle. What is the third principle, class? The third principle is, class, free trade. The goal should be to enter into free trade gradually. The goal should be to enter into free trade gradually. Means, yes, today countries are imposing 20% tax on each other, say. So the goal should be in the next 4 to 5 years, it comes down to 15%, then 10%, and gradually any trade is eliminated only. That is what is the main goal. So lowering trade barriers gradually through negotiations. Then what, sir? Then is predictability through binding and transparency. Then what, sir? predictability through binding and transparency. What does it mean? Students, commitments are bound. So, predictability implies that trade and investment should be encouraged. You should encourage investment from other countries into your country. And commitments are bound. You all remember in the last topic we did bound tariff? Each member has to undertake how much they bind themselves by. Let's say India has bound itself by 20%. Means India we cannot apply tax more than 20%. That is predictability. You have to give a binding agreement that is predictable, that India is not going to impose tax greater than this rate. That is called predictability. Next is fair competition. Next is what's a fair competition? Governments should try to encourage fair competition between nations. It means competition should be open. There should be rules on anti-dumping so that one does not dump goods in other countries. Encouraging development and economic reforms. It means there should be some flexibility for developing countries. There should be special provisions and technical assistance for their growth. These are the WTO principles that you should focus on. I mean, each developed nation should try to help out the developing nation in some manner or the other. So there are 6 things that we have been able to study: the MFN treatment, the national treatment, free trade gradually through negotiations, the predictability through binding and transparency, fair competition being promoted, and encouraging development and economic reforms. Right, sir. Students, having said that, let me bring you to this structure of WTO. We have discussed principles of WTO. We have discussed them as well. Now, there are certain important WTO agreements. These agreements are so important. I would use the ICAI module here to explain some of the agreements because they have appeared in the PYQs, friends. Let me take you to them. Let me take you to those agreements. Here it goes. Some famous WTO agreements. How can institute ask? How can institute asks? They will define that agreement. You have to remember the name of that agreement. Right? Let me explain. I will explain every agreement. Give me time. First one is agreement on agriculture. What does it aim at? It aims at strengthening GATT disciplines and improving agricultural trade. So agreement on agriculture focuses on improving agricultural trade. I repeat, agreement on agriculture focuses on improving agricultural trade. Got it? So the focus is on improving the agricultural trade. It includes specific and binding commitments. Look at the words: specific and binding commitments made by WTO member governments in the 3 areas of market access, domestic support, and export subsidies. So WTO member countries kind of enter into an agreement that they are not going to access somebody else's market in a manner that is unfair, like by giving subsidies to its farmers. You remember what America was doing in the last day? Example, America was giving its farmers subsidies. This enabled American farmers to sell their goods at a very low cost in India. That is not fair. So market access, domestic support, and export subsidies. Three areas. So WTO members have given commitment in agreement on agriculture in how many areas? Three. What are the areas? Market access, domestic support, and export subsidies. A very good question can be formed from here. Then, next one also we have discussed already in the previous units. Agreement on application of sanitary and phytosanitary measures. You remember where the goal was to protect human life by banning certain goods like, poultry cannot be imported from countries that have been suffering from some diseases. Establishes framework for planning, adoption, and implementation of sanitary and sanitary measures to prevent such measures from being used for unjustifiable discrimination. Yes, sometimes what happens, the countries do what? They use this reason to not allow other countries' goods into their country. When this is genuinely used, when it can genuinely cause a threat to my country, I will impose a barrier. But do you know, countries were using this as an excuse so that other countries are unable to sell their products into my country. Is this fair? I don't think so. Is it fair? I don't think so. Right. So agreement. So this second point says, yes, agreement on application of cyto and phytosanitary measures says, yes, where there is genuine cause, you don't let the other country's product in. But you cannot use this as an excuse to restrict imports. बहाना नहीं दे सकते आप. Sir, now we understand. Third point is agreement on textile and clothing. Class, this agreement, you will be shocked to hear, have replaced the multi-fiber arrangement. So, which arrangement has replaced the multi-fiber arrangement? Agreement on textile and clothing. They have replaced what? The multi-fiber arrangement. That is the point. So arrangement on textile and clothing have replaced the multi-fiber arrangement, which was prevalent since 74, which was existing since 1974 class. ATC provides that textile trade should be deregulated by gradually integrating it into GATT disciplines over a 10-year transition period. Over a 10 years transition period. Then we have agreement on TBT, technical barriers to trade. Agreement on technical barriers to trade. See, agreement on technical barriers to trade aims to prevent standards and conformity assessment systems from becoming unnecessary trade barriers by securing their transparency and harmonization with international standards. Yes, look, here the goal is to prevent standards and conformity assessment systems from becoming unnecessary trade barriers. Here they are seeing like this sanitary and phytosanitary measures, a government may impose a kind of rule that, okay, you cannot put this chemical into the product. If this chemical is not poured into the product will only not be made. You know why the government did that? They don't want your product inside the country. Or say, government will say from today, suppose Indian government does that, from today, no sugary drink will have soda. Overnight, Pepsi gone, Thumbs Up gone, Coca-Cola gone, Sprite gone, Fanta gone, Mirinda gone, economy gone. Everything gone. Why? Government says, no, I am not against you. I am against soda. I don't want people of my country to drink soda. Are you understanding? This standard has been used as a technique to support domestic producers and to prevent foreign producers from entering the game. This is the problem, class. I mean, this is the statement. Just like sanitary and phytosanitary measures are sometimes used as a justification prevent trade from taking place. Similarly, TBT or technical barriers to trade are used as a justification to prevent trade from taking place, which is not good, which is what we are against. Hello class, am I able to explain this class? Yes sir, you are able to. Then what is it that we have class next? TRIM, trade related investment measures or TRIMs. Trade related investment measure, TRIM or TRIMs. But sir, what is it? Trade related investment measures, what is it sir? Students, here the goal is very simple. It focuses on investments. It focuses that particularly the developing nations get investments which will boost their economy. Expands disciplines governing investment measures in relation to cross-border investments. It stipulates that countries receiving foreign investments shall not impose investment measures such as requirements, conditions, and restrictions inconsistent with the provisions of principle of national treatment and general elimination of quantitative restrictions and general elimination of quantitative restrictions. Example, measures such as local content requirements and trade balancing requirements should not be applied on investing corporations. I repeat, two measures should not be applied: local content requirements and trade balancing requirements should not be applied on investing corporations. Did you notice this? What measures? Local content requirements and trade balancing requirements should not be applied on investing corporations. You know why? Why? I'll tell you why. See, often what happens is, suppose India wants that America does not invest in our country. What will India do? India will say the American company who is coming into India, listen, you have to use 50% of goods from India only. Local content requirement. So this is acting as a deterrent. So such, what the goal of WTO is to remove such deterrents. Why such conditions? This is what WTO is apparently saying. But let me tell you, WTO is merely a puppet of the developed nations. It is a useless body. Okay, it is a mere puppet of developed nations like America and China. You know why they are saying this? Because whenever America comes to India or any other country comes to India, India says use domestic goods also, our goods also. Now this increases their cost. So they are telling through WTO, no, you should not encourage such deterrents. What kind of deal is this? What kind of deal is this? Next, there are anti-dumping agreements. Next, there are anti-dumping agreements. What do they do, sir? What do the anti-dumping agreements do, sir? They seek to, yes, see, if somebody is dumping in your country, you impose anti-dumping duty, correct? Like China, when it dumps its products into our country, we impose anti-dumping duty, correct? That's okay. This agreement says that this should not be done unnecessarily. This should not be done unnecessarily. Anti-dumping agreement seeks to tighten and codify disciplines for calculating dumping margins and conduct to protect domestic industries. So when you are using anti-dumping for right reasons, when do you use anti-dumping duty? When other countries are dumping in your country, your economy is getting hurt. That is okay. but you totally want to ban their goods. You are not able to impose a ban. So indirectly, you are imposing heavy anti-dumping duty. That should not be the case. I mean, such tools in all the 6 points it has been given that such tools that we did in chapter 2 and 1 should not be used as a explanation to stop trade. They should be used righteously. It's interesting now. There should be custom valuation agreements also. There should be custom valuation agreements also. This is also another reason trade stops. This is also another reason why trade stops. You want to understand? Yes, sir, we do. Okay, think carefully. This is India. This is USA. USA sent some goods to India. Now, India is going to impose import duty. Now, the US, as per the US Custom Valuation Department, the value of goods is 10 crores. As per Indian Good Department, it is 20 crores. So India will impose the tax on 20 crores on the American company. But the American company claims that no, the tax should be imposed on 10 crores only. Because the way goods are valued as per custom rules in US might be different from the custom rules in India. So then WTO understood and it came across some valuation principles, which says that all customs department across the globe should follow these rules. This will help the goods, the value of goods in America to be equal to the value of goods in India. Why? Because importing country will do what? They will want to charge more import tax. So to charge more import tax, they will show higher value of the imported goods. Are you understanding how different barriers can be created for goods coming from other countries? You have understood, right? How the barriers can be used as an excuse. Okay. Next class, agreement on PSI, pre-shipment inspection, intends to secure transparency of pre-shipment inspection wherein a company designated by the importing country conducts inspection of the quality, volume, price, classification, etc. of merchandise on in the territory of exporting country on behalf of importing country's custom office and issues certificate. The agreements also provide for a mechanism for solution of dispute between PSI agencies and exporters. What does it say? Again, India is importing something. Indian company is importing something from an American company. So obviously, the Indian importer will take the goods in his factory, yes or no, before opening them. Will they like it if the customs authority in India open those goods? Is it logical? No. But the customs authority want to check the goods. So in America, the importing country, that is India, will appoint a agency, a company who is going to check the American companies go down when the goods are being packed and sent to India. This agency will now issue a certificate to India saying so many goods have been packed. These are the goods have been packed. These are the prices at which they have been packed. And then they will send these goods to India. And then they will send these goods to India. This kind of arrangement is called PSI, pre-shipment inspection. Then agreement on rules of origin. When the goods are being imported, the importer has to show where these goods have been coming from. The importer has to obtain a certificate of origin from that exporting nation to ensure that goods are not coming from an enemy country, to ensure that the goods are not coming from an enemy country. You are understanding now what WTO is doing? WTO is looking into whatever barriers can be created in imports and exports. And WTO's sole intention is to remove or reduce such barriers. Then we have agreement on import licensing procedures. Then we have agreement on import licensing procedures. What does this agreement say? Agreement on import licensing procedure. What does this agreement say? You are importing goods from outside. We are importing goods from outside, right? Agreement on import licensing procedure says what? Class, what does it say? See, we are importing goods from outside. That is okay. हम लोग import कर रहे हैं. That's okay. What the importing country does often is when they don't want the goods of other country to come into the boundaries, na, they create unnecessary hurdles. They delay giving the license because until you get the license, you can't import. They will give you the license very late, or they are going to charge you huge amount of money for the license. Basically trying to push you back so that you don't get the goods on time. Agreement on import licensing procedure relates to simplification of administrative procedures and to ensure their fair operation so that import licensing procedures of different countries may not act as trade barriers. Because oftentimes countries may require so much import license procedures that one is not able to get the license only. Then agreement on subsidies and countervailing measures aiming to clarify definitions of subsidies, strengthen disciplines by subsidy type, and to strengthen procedure for adopting countervailing tariffs. So, when is countervailing duty imposed? I told you, this chapter is connected with the previous one. When is countervailing duty imposed? When the exporter in their country is enjoying subsidies from their government. So the importer in their country, to protect its local producers, imposes countervailing duty on such subsidy enjoying goods. So to impose countervailing duty, there needs to be a valid proof that the exporter in their country have enjoyed some subsidy. Yes, yes. So when you can impose countervailing duty, there should be proper rules regarding that, so that no country can use countervailing duty as a justification to prevent imports from some country. You should not be using, countervailing duty as a justification to not let other countries' goods come into the boundaries of your country. It shouldn't be used as a justification for the same. It should not be. Then, agreement on safeguards clarify disciplines for requirements and procedures of imposing safeguards and related measures, which are emergency measures to restrict import in the event of sudden surge in imports. So students, suppose there is a sudden surge in imports. What do countries do? When imports increase a lot, they impose safeguard duty to safeguard their domestic economy. So yes, you can impose safeguard duty, but only when certain rules or regulations or criteria have been met. Are you understanding different agreements of WTO? How much WTO has tried to work? Okay. Now, General Agreement on Trade in Services, GATS. This is the WTO speciality. Because before WTO, its ancestor was General Agreement on Tariff and Trade, GATT. GATT did not cover services, did it? No. WTO imposed service related rules also, that how disputes are being settled when service exchange takes place. Let's read it. This agreement provides the general obligations regarding trade in services such as MFN treatment and transparency. It enumerates service sectors and stipulates that in the service sectors for which it has made commitments, a member country cannot maintain or introduce market access restriction measures and discriminatory measures that are severer than those they were committed during the negotiations. India has given that, okay, we are going to import these services from USA. India has given commitments. Now, whatever commitments India has given, that okay, on services, we are not going to impose so many rules and regulations. After they start importing those services, India cannot change. Read it again. In addition, it enumerates service sectors and stipulates that in the service sectors for which India has made commitments, it matlab India here, a member country can maintain or introduce restrictions that are discriminatory that were committed during the negotiations. So once you have agreed to something in negotiation, you cannot later on deter those arrangements. Okay, gets. So it simply means once you have given a commitment, stick to that commitment. Now, very important. Next one is very important. Suppose I told you, no, suppose Domino's comes into India. They come with a technology which is patent. India sees the technology and copies it and sends Domino's out. If you do this with Domino's, it is okay. Domino's will go out of India. But do you think other countries are going to invest in India now? Nobody will be interested in India. India will be kind of secluded. Why? Because it did not respect the intellectual property of those nations. It did not respect the intellectual property of those nations. Agreement on TRIPS. Trade related aspects of intellectual properties. Intellectual property rights. This agreement stipulates MFN treatment and national treatment for intellectual properties. For intellectual properties such as copyrights, trademarks, geographical indications, industrial design, patents, IC layout design, and undisclosed information. In addition, it requires member countries to maintain high level of intellectual property protection. High level of IP protection. So when a country has trusted you and has come into your country, you should respect its IP. You should not copy its intellectual property. If you do that, others are not going to be interested anymore. Then class we have trade policy review mechanism. What does it do, sir? It provides the procedures for the trade policy review mechanism to conduct periodical reviews of members' trade policies and practices conducted by the TPRB, Trade Policy Review Board. Conducted by the Trade Policy Review Board. Good. So trade policy review mechanism, it provides students the procedures for trade policy review mechanism to conduct periodical reviews. To conduct periodical reviews of members' trade policies and practices conducted by the Trade Policy Review Board. Next is plurilateral trade agreements. Next is plurilateral trade agreements. So, multilateral trade negotiations are those involving entire WTO contracting parties, right? Plurilateral trade agreements involve several countries within a common interest, but do not involve all WTO countries. So, a contract is multilateral if WTO members are only involved. But if a contract involves some members who are not WTO members, then it is called a plurilateral agreement. So multilateral and plurilateral are different words. What is common to both? There are many countries involved. What is common to both? There are many countries involved. But what is the difference? But what is the difference? Class, the difference is, class, the difference is in plurilateral, member country may not be there. It means other countries might be involved in plurilateral, right? So that is interesting and important. So, students, we have been able to discuss so many good points. In fact, all the 16 points I have explained. You see, all the 16 points I have explained. Now, students, now comes another round, comes another arrangement, comes another agreement. The Doha round. What is Doha round? What is the Doha round? Students, it was launched in Doha, Qatar, Middle East in November 2001. It was the ninth round. It seeks lower trade barriers and revised trade rules in 20 areas, including agriculture, market access, services, trade facilitation, environment, IPR, etc. So there are 20 areas covered here. Imagine class. How many areas? 20 areas covered here. Agriculture, market access, services, trade facilitation, environment, etc. Right, sir. This was your Doha round. So, acha, one of the thing is a very important PYQ question that has come. I will show it to you. The most controversial topic in the Doha agenda. What was the most controversial topic? Agricultural trade. Very important PYQ. Very important PYQ. They may ask which was the most controversial topic. You know that. And finally, class, what is G20? Before I start with your MCQ practice, what is this G20 now? Students, basically, G20 is the 20 top countries, 20 more powerful countries that have come together for cultural, economic exchange. That's it. You want to know the name of these countries? Here are the, look, A for Argentina, Australia, Brazil, Canada, China, European Union, France, Germany, India. It is in the alphabetical order, right? Indonesia, Italy, Japan, Korea, Mexico, Russia, Saudi Arabia, South Africa, Turkey, the UK, and the US. All these are there. Now, students, we can start with some MCQs before I am interested in moving on to the next exercise. I have designed some 30 MCQs for you all. Let's solve them one by one to know whether we are able to understand. Let's go ahead, everybody. RTAs aim to. What does regional trade area aim to do? What does RTA aim to do? Increase taxes, reduce trade barriers, stop imports, increase inflation. What does RTA aim to do? Reduce trade barriers. Of course, regional trade agreements are there to resolve Trade barriers, to reduce trade barriers. What does GATT covers? General, see, for what is GATT? General Agreement on Tariff and Trade. General Agreement on Tariff and Trade. What does GATT cover? General Agreement on Tariff and Trade. Goods, services, intellectual property. All. GATT. See, General Agreement on Tariff and Cover. All is the incorrect answer. The correct answer is goods. All had been the answer if it was WTO. So good. When was WTO established? It's not GATT. When was WTO established? I have discussed it today only. I happen to have discussed it today only, class. Nineteen 1995. 1995. MFN means what? Most favored nation. What does most favored nation means? Treat everyone equally. Treat everyone equally. Favor all equally. Favor all equally. National treatment applies when? Before entry, after entry. Once the goods have entered your country, that is after entry, you will not discriminate. You will not treat them any different from your local goods. So once they have entered, before entry, they will be treated differently. They will be taxed. Who is stopping that? Class, next one. See, first five I have discussed with you. Now you take your time and answer. Customs Union has no tariff, common tariff, no imports or quotas. I already know the answer. European Union. European Union is an example. So there will be common external tariff. Among themselves, no tariff, but a common external tariff. Haan. Free trade area allows something unique that was not in customs union. Free trade area allows what? Same tariffs globally, different external tariffs, no exports, fixed prices. What is it? Tell me. So class, free trade area allows different external tariffs. You all remember, among themselves, they are not going to impose tax. I gave the example of NAFTA, North American Free Trade Area, where what happens is USA, Mexico, Canada can deal and make their own policies with India. But in a custom union, any country is going to impose same tax from a country outside the union. Where is WTO headquarters? Today we discussed Geneva, Switzerland. Today, how many members approximately WTO has? Tell me the number, class. Today, WTO has approximately how many members, friends? Let's see if you all remember that or you are able to answer that. I remember that, but let's see whether you do. Today, WTO has 164 members, class. So the correct answer is 164. 164. Yes, while the time of joining, when it was just formed, then 123 countries had signed it? When did Uruguay round start? When did Uruguay round start? Yes, acha, first answer me this. Uruguay round led to formation of what? It led to formation of WTO. We had discussed it, Uruguay round. So it led to formation of WTO in 1995. So means the answer lies before 1995. So the answer can't be 1995. Answer can't be 2001. And in the seventh or the ninth meeting, WTO came into existence. So 1986 would be the logically correct answer. When the discussion or the negotiations had started. Class. TRIPS deals with what? TRIPS deals with what? TRIPS deals with what? Trade related aspects of intellectual property. What is intellectual property? This one. So TRIPS deals with intellectual property rights. TRIPS deals with intellectual property rights. Because if you all focus on the full form, it's trade related aspects of intellectual property rights. So remember, there are TRIPS, many, around 16, around exactly 16 in the book, WTO agreements. Cytosanitary, multi-fiber arrangement, there are different. So if if any of you forget, it's going to cost. GATT deals with what? GATT deals with goods, services, labor, and capital. What does GATT deals with? Services. GATT deals with services. Class, the 13th one, everyone. Anti-dumping duty prevents what? Students, anti-dumping duty prevents what? Think carefully before answering. Anti-dumping duty prevents exports, unfair pricing, imports, subsidies. What? What does anti-dumping duty prevent? Exports, unfair pricing, imports, subsidies. What? Anti-dumping duty unfair pricing. Prevents unfair pricing. Because when I am going to impose anti-dumping duty on your product, you will not impose below the market price. Because you know fully well that if you try to do that, I will increase the tax. So it's better SPS. Okay, what is SPS? Sanitary and phytosanitary measures relate to services, safety, tariff, or labor. As I remember, it is for your safety standard. Dear students, these are safety standards. TBT. So it incorporates, good to see, it incorporates previous questions also. TBT. I had explained it in the WTO arrangements, technical barriers to trade. The name itself tells you the answer. Prevents technical barriers. As I have told students, proper reading twice or thrice. In every class, I dictate the same. Listening to the class is number one. That's going to get 80% of the job done for you. Remaining 20% will be your running notes and your reading of the ICAI material at least 3 times. This is the recipe, time proven recipe of above 70 easily, above 70% easily. Since this is an economics, subject, I'm talking about economics particularly. It has been time tested, class. Okay. This is good. Conceptual level question, a good question. Common market allows what? Think carefully. That was something unique related to common market. Common market allows class goods plus factors of production. Goods plus factors of production. Goods plus factors of production. Right. Monetary union includes tariffs, currency, quotas, and subsidies. What does monetary union include? What does monetary union include? Tariff, currency, quota, and subsidy. So everyone, the special thing about monetary union was that here currency is also allowed. In common market, just as I told, factors of production are also allowed. That was the unique point if you had listened to the discussion. And in monetary union, I had told currency was the unique point. So class, very important point. A very good point. Today we discussed it. Where was Doha round launched? Common. Very easy question. Come on. Basic knowledge. What does Doha pertain to? Middle East, Qatar. You remember I had also made you mark that the most controversial topic of Doha round in the last line in the ICI material was agriculture. So Doha round was launched where? Students, the correct answer goes to be Qatar. You see, around 20 to 30 questions I have framed. This will cover your entire unit only. You are seeing that magic, of course. WTO promotes what? Protectionism, free trade, isolation, monopoly. Of course, the objectives of WTO you people have studied. I'll wait for a minute before I give any commentary. WTO promotes protectionism, free trade, isolation, monopoly. WTO promotes free trade. Binding tariff, very important. We have discussed it in the unit 2 as unit 3 as well. Binding tariff, also referred to as bound tariff. Think carefully before answering, class. Everyone, you will remember, students, I had taught you it is the maximum limit that the members undertake to charge. Actual applied tariff means it can be lesser also. But under the WTO commitments, they are not going to increase beyond that. So it is the maximum tariff that you are going to charge. If your answer was maximum tariff, class, congratulations, you all were correct. Absolutely correct. Moving on. GATT failed due to, students, option A is strong loss. Okay, GATT, why did GATT fail? Limited scope, high coverage, or services included. What was the reason GATT failed? Option A I will write so that a stringent laws. I mean tough laws. Stringent means tough laws. Question is why GATT failed. Question number 21 of the day. Question number 21 of the day. Friends, why GATT failed? Stringent laws, limited scope, high coverage, services included. What do you think is the correct answer? Stringent laws, limited scope, high coverage, and services included. So students, the correct answer is, everyone, students, the correct answer is, it had limited scope. It only covered goods. It ignored your investment protection. It ignored your services protection. It ignored your intellectual property protection. Here is your WTO, the hero organization. What does it cover? Of course, every friend is going to answer that correctly. I am positive. Class, WTO covers goods, services, and intellectual property, all the three. Goods plus services plus intellectual property, all the three. Trade policy review done by IMF, trade policy review done by WTO, by UN, or by the World Bank. Who does trade policy review? Tell me. In fact, we have already talked about trade policy review mechanism. I had drawn a diagram like this. Who will do trade policy review? Obviously, WTO. In fact, I went into such details where I had classified the WTO levels. High level takes the most decisions, and the middle level solves the dispute. The General Conference, the General Council. So, the General Council is the answer of the WTO. They asked very easy, who does it? In fact, I wanted the question to be like this: which wing of the WTO resolved disputes? Then it would be General Council. Subsidy agreements deals with what? It deals with exports, it deals with government support, it deals with imports, or it deals with labor. What does it deal with, class? Subsidy agreement. Question number 24 of the day. Government support. You are right. It deals with government support. Correct. Ha. What are safeguards? Permanent ban, temporary restriction, taxes or quotas. What are safeguards, class? These are permanent bans, temporary restrictions, taxes or quotas, class. So students, the correct answer is temporary restrictions. When there is a sudden, you remember, when there is a sudden surge of imports, sudden rise in imports that take place, then we use this word. When there is a surge of imports. Case-based tricky questions. Okay, let's see. If India gives US lower tariff, must give India must give the same treatment to others also. Which principle of WTO is being highlighted? National treatment, most favored nation treatment, TRIPS treatment, or GATS treatment? So students, it's a very good question and it is real life application of that. That's the, magic, I would say, of this particular question. I know the answer. My dear friends, answer happens to be most favored nation treatment. MFN treatment. Most favored nation treatment. Equal treatment after import. Equal treatment after import. Equal treatment after import. After import, so after entry of goods. Once the goods have entered the boundaries of the country, then you are going to give them or grant them equal treatment. That is principle of national treatment. Okay. Ha. Free movement of labor. I mean a factor of production they have spoken about. They have spoken about a factor of production. So free movement of labor happens in which class? Common markets. Even before seeing the option, we knew the answer. Common market. WTO dispute system ensures fairness. It ensures fairness. Most controversial Doha issue. In the last line of ICAI mat of that particular paragraph, most controversial topic is Indian agriculture. Students, we happen to have covered chapter 9, unit 3. Now we take the baton forward and we move to chapter 9, unit 4. Let's go ahead, class. I am positive that this is clear to everyone. Okay. So friends, first thing is in chapter 9, unit 4, the first thing is what is exchange rate? What is exchange rate? Students, today I need to buy something from outside or I sell something to outside, right? If I am buying and selling within my own country, rupee will do. Rupee se kaam ho jayega, okay? I am selling something in rupee and I'm, getting rupee in return. So that is okay. But class, if I want something from America, I will need US dollars. What will I need? I will need US dollars. Why? Because I will pay in dollars. So I will need US dollars. The exchange rate is the price of one currency in terms of another. It shows how much of one country's currency is needed to purchase one unit of another currency. One unit of another currency. Now see, to buy $1, see, dollar is more in demand, so value of dollar will be higher. Rupee is less in demand, so value of rupee will be lower. So suppose $1 is 95 rupees. Suppose $1 is 95 rupees. It means to buy $1, we need 95 rupees. This is called direct quote. 75 rupee per dollar. I mean, stating exchange rate in this format, presenting exchange rate in this format is called direct quotation. But suppose $1 is 95 rupee. It means 1 rupee is how many dollars? 1 by $95. Okay. So 1 by 95. It's $0.01. It's $0.01. $0.0105. Understood? So here I have told, where is it? Here I have told 1 unit of local currency is how many units of foreign currency. 1 unit of local currency is how many units of foreign currency. When I do so, class, when I do so, class, it is what kind of quote? Indirect quote. It is what kind of quote, class? Indirect quote. So how many units of foreign currency is 1 unit of local currency? It's an indirect quote. But how many units of local currency is 1 unit of foreign currency? So $1 is how many rupees? That's a direct quote. And that is what India often uses. Okay. Now this is interesting. Class, first thing is nominal exchange rate and then is real exchange rate. Nominal exchange rate is market rate at which you can buy and sell one currency. So to buy $1, how many units of currency you need to give? That is your nominal exchange rate, right? Right. Real exchange rate is the relative price of goods between two countries. Relative price of goods between two countries. So suppose a computer, well, suppose let's say $1 is rupees 100. For simplicity, I have given. Okay. Suppose a computer in India costs rupees 80,000 and a computer in the America costs $1,000, $1,000. Okay, I have written all this. Now, if I say the real exchange rate, see, nominal exchange rate is what? $1 is 100 rupee. But real exchange rate is, dear students, the conversion of goods. So, suppose I do 100 rupee. Okay, 100 rupee, right? I do 100 rupee into, let's say, 1,000 by rupee 80,000, right? That is the Indian price. 1,000 was the American price, Indian price. So 20 gone, 20 gone, 20 gone, 20 gone. So we are getting 10 by 8. 10 by 8 means 5 by 4. So 1.25, 1.25, right? What does 1.25 means? Means price of one USA computer is equal to price of 1.25 Indian computers. Price ratio. So in exchange of one USA, so the price of one USA computer is worth 1.25 Indian computers. How did I calculate the real exchange rate? It is the nominal exchange rate into foreign price of good by domestic price of the good. What did I do? the nominal exchange rate into foreign price of that good by Indian price of that good. Sir, we do understand, right? Friends, we do understand, right? Right, sir. Real exchange rate. Okay. So the example that I just used has been written here. So that's okay. Just one statement I need you all to know. If real exchange rate falls, if real exchange rate falls, if real exchange rate falls, means foreign goods have become expensive. If real exchange rate falls, foreign exchange goods have become expensive. So imports will fall. Exports will increase. So you all should write it down. A fall in real effective exchange rate boosts exports, but it kills imports. It reduces imports. Real effective exchange rate. It boosts exports, but it reduces imports. This is what I did. If RER increases, so here it is. You should write this also. If RER increases, exports become costlier. So if exports are costlier, imports are cheaper, so imports are increasing. So if RER increases, imports increases. Let's go ahead, class. Now, now, students, how do you arrive at the exchange rate? One is the floating exchange rate. One is how much? The floating exchange rate. Pay attention, class. One is how much? The floating exchange rate. Pay attention, class. So if I draw this curve, here is the demand curve. Here is the supply curve. They intersect here. So this is the exchange rate. This is the exchange rate. So floating exchange rate or flexible exchange rate is decided by the market forces of demand and supply. It decided by the market forces of demand and supply. Because you may think na that, sir, $1 is how many rupee? $1 is how many rupee? How do you know this, sir? How do we know this, sir? So students, $1 is how many rupee? You know, you come to know this by allowing the market forces to decide the exchange rate. In the floating or the flexible exchange rate system, market forces of demand and supply take their course, take their decisions. So I'll give you an example. Suppose $1 is 80 rupees. Suppose this is the price of dollar. Now, demand for dollar will heavily increase. So let's say there is demand for $100,000 at this low rate. But the suppliers of dollar are not very happy that dollar is trading so low. So only 40,000 units of dollars are available. Let's say the value climbs to rupees 90 a dollar. But the demand will fall. But now the suppliers of dollar are happy. So they will increase their supply at even 100 rupees a dollar. It's going to become 80,000 and it's going to climb to 100,000. So rupees 90 a dollar. So the price of dollar at which demand becomes equal to supply. The price of dollar at which demand becomes equal to supply. When this is the market determined price, then we call it flexible or floating exchange rate system. Before I explain you manage float, I would explain you fixed exchange rate system first class. You all know this, na? This is chapter 9, unit 4 going on, right? Fixed exchange rate system. Students, fixed exchange rate system means $1 is exactly that much rupee. So fixed exchange rate system means suppose government has fixed $1 as 80 rupees. So bas, that's it. Game over. Suppose the government has fixed $1 as 90 rupee. Game over. That's fixed exchange rate system. Government has established the exchange rate. Value is pegged by the government to another currency or basket. Value is pegged by the government to another currency or basket. Central bank intervenes regularly. Yes, in fixed exchange rate system, who takes the decision to determine the exchange rate? Central bank. Students, but today, most of the countries, what they follow is something called managed float. What do they follow? Managed float. We don't follow the two extremes. That is to leave everything on the market or to leave everything on the central government. We don't follow these two. What we follow now is managed float. What is this managed float? Here we go. Have a look here. Government is going to set up the top and the lower levels. Government will allow exchange rate to be freely fluctuating within this level. That is to freely be determined by the market. So let's say the lower level is set as rupees 40 per dollar and upper level is set at rupees 100 per dollar. Here let's keep it as 60 per dollar. So it basically means that till the exchange rate is above 60 and below 100, there is going to be no governmental interference. Government will not participate. Government will do nothing here in this interval range. See, nothing doing. But as soon as the exchange rate is trying to climb this limit, the government is going to interfere it to throw it here. In some way, government will interfere. And if the exchange rate tries to touch this level, government will interfere to bring it well back in the limits. So the overall idea is to keep the exchange rate within the limits. To keep the exchange rate within the limits. That's it. Now, there is a concept of foreign exchange market. Now there is a concept of foreign exchange market. What does it say? Where do you buy dollars? If you need to travel, if you need to import, you need to buy dollar from somewhere, right? That is the market. Market where foreign currency is bought and sold. Who are the participants here, sir? Students, your participants here are commercial banks. You have brokers. You have investors. You have RBI. So students, you see the participants here are commercial banks, brokers, investors, RBI. Commercial bank is State Bank of India. Example is State Bank of India. Brokers are the middlemen who facilitate such exchange in return of a commission. Students, in this instruments, there are two types of the instruments. In a foreign exchange market, spot market and future market or a forwards market. Spot market is suppose after 3 months I need to visit America. I need dollars, right? So for me, $1 is rupees 100, suppose. So I give them dollars, I take rupee and I go to my America. That's spot market. Immediate buying and selling. Immediate buying and selling. Much like you buy a packet of chips from the outside, right? You buy and sell chips from the outside. There it is. But what is the forward or the future market class? It's an interesting concept. It's an interesting concept. Students, suppose this is America and this is India. Indian importer is buying goods worth rupees 100,000 from America. Indian importer, USA exporter. Okay, okay. Now Indian importer is buying goods worth rupees $100,000 from USA. Now the deal has been done such that the payment will be done 3 months later, because the goods will be made, the goods will be checked, the goods will be delivered, and so on and so forth. Today, dear students, the exchange rate happens to be $1 is rupees 80. So if at today's price, Indian importer buys, the price for Indian importer is 80 into 100,000. It means 80 lakh rupees. Now, the Indian importer is worried. What if 3 months later, $1 becomes rupees 100? Oh my God. So 100,000 into 100 means 1 crore. So if I calculate as per today's rate, I have to pay 80 lakh rupees. As an Indian importer, I think my cost in terms of rupee. So today I am having to pay 80 lakh rupees. If I pay 3 months later, I have to pay 1 crore rupees. Banks have come up with a solution. Banks say, relax, don't worry. Banks call this Indian importer and sign a deal with. Banks say, okay, let's sit today and decide that whatever be the exchange rate today, you are going to buy from me $100,000, because the importer needs to buy the $100,000, right, to make payment to abroad. So the banks say, okay, you will buy it from us. Of course, you will have to buy it from us. Okay, let's sit today and finalize the rate of 83. Now you go home and sleep well. Whatever be the exchange rate 3 months later, it is 90, it is 100, or it is 200. The Indian importer is now relieved. The Indian importer now is relieved that whatever be the exchange rate, $1 is 83 rupees. $1 is 83 rupees. $1 is 83 rupees. This is forward market, where the rate has been decided today, but the exchange will be taking place 3 months later or sometime in the future. That is why the name is forward or future market. In your inter and final level, when I had become chartered accountant, my favorite subject used to be financial management. In inter and final, you will do sums on them. In inter and final level, you are going to solve sums on them. Though, whatever it is, let's come back to our discussion in hand. So $1 used to be 80, now $1 is 83. So this rate has already been punched in. That's future market, where the rate has been discussed today, negotiated today, exchange has not taken place today. It will take 3 months later on. Now, students, two terms that deserve due consideration: currency depreciation versus appreciation. See, the depreciation and appreciation would take place due to what? Market forces of demand and supply. So depreciation and appreciation are words used under flexible exchange rate system. Used under flexible exchange rate system. Now, now. Here what happens in depreciation, our domestic currency loses its value. So suppose rupee was 80 per dollar. Now it has become 100 per dollar. So the value of rupee has gone. Imports have now become costlier and exports have now become cheaper. That is depreciation. But for that depreciation to take place, it should have taken place because of government or because of the market forces. Market forces. If the same value of rupee goes down because the government interferes, then it will not be called depreciation, it will be called devaluation. So if it takes place because of the market forces, it's depreciation. If it takes place because of the government, it's devaluation. Now, what is appreciation? Here, domestic currency gains value. Opposite. So rupees from 100 per dollar to 80 per dollar. Again, due to market forces. Here, imports become cheaper, exports costlier. It should again happen under market forces. If it happens because of government interference, if it happens because of government interference, then it is called revaluation. If government intervention, then it is called revaluation. Right, sir. And finally, this is what it is. Now, class, two terms in our next unit, that is the fifth unit of this topic, we happen to have, class, we are going to discuss the next unit in the next class only, but there is a terminology, one or two, that I need to explain for investments. Students, one thing is called foreign direct investment, and the other thing is called foreign portfolio investment, FDI and FPI. What is foreign direct investment? See, you all have understood money has come from the foreign country, right? But when the foreign participant has invested in your country, to actively participate in the businesses in your countries, to actively participate in the business in your country. So their intention is they come into your country and they're going to actively conduct the business in your country. That's foreign direct investment. That's foreign direct investment. But when the foreign investor is not interested in business, doing business. For example, if Bill Gates invests in India, he sets up a new Microsoft. That's foreign direct investment. But if you only buy the shares of this company, that's FPI, foreign portfolio investments. So if the investment has been done on, on the real assets like land, FDI, active participation intention by the investor. But if the foreign investor just wants to take advantage of the share prices of Indian companies, then it is called FPI, foreign portfolio investment. Foreign portfolio investment. Understood, sir. Students, what's very important here is you understand in FDI, for something to be called as FDI, the investment stake in that business of the foreign investor should at least be 10%. This number is very important. If it's less than 10%, generally we consider it to be FPI. Understood, sir. So students, with this, we wind up the discussion. See you all in the next class. Goodbye, everyone.
Session over, sir.
Yes.
Thank you, sir.